Hello, ladies and gentlemen. My name is CPA Samson Okari from Samson and Associates, where we teach accounting standards. And in this session, I'm going to do an overview of IFRS 16, a standard that deals with the leases. Now, the standard IFRS 16 was issued in January 2016 with an effective date of 1st January 2019. And the standard replaced I-17 leases, IFRIC 4, which dealt with determining whether an arrangement contains a lease. It also replaced the Standard Interpretations Committee 15, or we can call it SIC 15, that dealt with the operating leases in terms of incentives and how they should be treated. It also replaced SIC 27, which dealt with evaluating the substance of transactions involving the legal form of a lease. Now, this standard sets out the rules for recognition, measurement, presentation, and disclosure of leases. The objective of this standard is to ensure that both lessees and lessors provide relevant information that is structured in a way that faithfully represents those transactions as the basis for the users of the financial statements to assess the effect that leases have on the financial position, on the financial performance, and on the cash flows of an entity. Now, let's straight go to what is a lease. Paragraph 9 of IFRS 16 defines a contract or states that a contract is or contains a lease if it conveys the right to control the use of an identified asset for a period of time in exchange for consideration. That definition leads us to the lease recognition criteria, which I'm going to summarize in form of a diagram. The first question you need to ask yourself when determining whether a contract is or contains a lease is, number one, is there an identified asset? Because there must be an identified asset. For example, a floor of a building, let's say mezzanine floor or first floor, or a particular room, let's say B1 or R6. If the answer to that question is no, then the contract does not contain a lease. Therefore, we need to use other IFRS standards in accounting for that arrangement. Now, if the answer to that question is a yes, we then need to move to the second question. Does the lessee obtain substantially all the economic benefits? If the answer to that question is a no, again, even if the first one was a yes, that contract does not contain a lease. We have to use other IFRS guidance in accounting for that arrangement. The third question you need to ask is, does the lessee have the right to direct use of the identified asset? And in this, we mean that we are looking at whether the lessee is the one who directs how and for what purpose the asset is used. And if they have the right to direct the use of the identified asset, then that contract contains a lease. So if the three questions are in the affirmative, then it implies that that contract contains a lease, and therefore we need to account for it using IFRS 16. But if any of the questions that we have asked is a no, or is in the negative, then we have to use other IFRS or accounting standards in accounting for that particular arrangement. It should be noted that IFRS 16 only deals with full IFRS. So we are not talking about an SME. If you are an SME or you're applying IFRS for small and medium enterprises, then you must use IFRS for SMEs as it is. So this was just a brief summary of what IFRS 16 is and what the lease recognition criteria are that entities need to use in order to account for IFRS 16. For more details, you can follow us on YouTube, and we are Samson and Associates on YouTube and other social media pages. We also do IFRS trainings, full immersion trainings, master classes, webinars, seminars, workshops. You can reach out to us and we can be able to help in tailoring or customizing and delivering high impact IFRS training. Thank you.